All right, guys. I guess we'll go ahead and get this thing started if y'all want to, man. Y'all tell me if y'all ready.
Ready?
Oh, let's do it. All right. So I guess what we'll do is we'll start off with the ES. Both the ES and the EQ is what we'll go over. Kind of what I've been able to find and really to minimize the risk. Um, Using a Slack scaling plan, and also define a target. That was probably one of the harder things to do was define a target and get to a point where we could we could evaluate that 2-to-1 risk. You know what I mean? And that's kind of what I was trying to get to with this deal. But I went ahead and done on the 1 minute chart Friday's price action. This is Friday. We'll do Thursday. I didn't do anything with the overnight just because I don't trade the overnight. I try to spend it, with family. You know how that goes. So that's the way I left it. So I done Thursday and Friday's price action and traded this strategy fully. So we'll go over it. There again, this strategy, as you know, it's probably not the best of ideas to get involved with this thing right at the open. And I mean, right before the open, when some volume's coming in the market, and then right after, or right up into the close, you don't want to get involved in it. I haven't found any luck with it, to be honest with you. All right, so the first trade of the day, Thursday, to give you an idea what I've mapped out here. This might look a little different than y'all's, but this is the 3 thin off, uh, zero line, purple, teal, whatever color. This cloud, I couldn't find a Wonder Cloud on the trading view, so this is the closest I could come up with. It's called a Thunder Cloud, which it still, nonetheless, it represents it, pretty well. Obviously, the Bollinger Bands are still the same. That's it. Um, so, and I went ahead and mapped all this stuff out. Okay, so obviously what was looking for. We'll just start to open. I didn't see anything that would want me to get involved. Right here's the open. You don't want to trade the open, so we're looking past the open. Zero line come through. We didn't really get anything there, so there's nothing to do. On the short side, we didn't get a. And here's what I kept running into, and so we punctured the Bollinger Band, as you can see. However, we didn't really get no pullback into the cloud. We didn't get any really pullback whatsoever, and this thing just kept falling and falling and falling. So we honestly, there's nothing you can do there. You just look for another setup. Don't try to push the issue. Just leave it alone. Keep following it. Keep following it. We come over here. We bust above. We didn't really get anything on the long side right here. Here's where it actually crossed, right? We busted above it right here, but you have got so far past that zero line when you punctured it that you're really not trading a strategy at that point. You want to see the slow line go above zero and puncture right at it, right? So if it 1 bar ahead or 1 bar behind is really what you want to see. Ideally, you want to see right as soon as it crosses zero, but just to keep yourself out of trouble, quit trying, that way you wouldn't take a long right here, well out front of that. It would just better serve to just leave it be. So we're watching. We break through right here at zero, and we've got a puncture of the lower Bollinger Band. And what I'll do is I'll take, it's probably going to be easier to hide this. It probably won't be easier to hide it. It'll probably just be easier just to move it. So you can see price it a little bit better. So we broke it, and we're looking for that puncture, okay? And we did. We got the puncture of the lower Bollinger Band, and you're looking for a pullback into it. So what I have found is if you go back, look to your left, find a high, and you define the low by that puncture. I'll just go ahead and delete these, and I'll run new ones so you can see what I was doing exactly. Um, I'm going to draw this panel right here. I just used the fib retracement, right? Go from the top, find you the high, the most recent high, and all the way down to where it crossed zero and punctured that Bollinger Band. All right, and then go ahead and get you your target. Run it the same. Go ahead and cast you some targets out there. All right. And what I was using to scale in was I want to scale in off the 3, the 0.38, the 0.5, the 0.61, and the 0.86. All right. Now, granted, I understand not everybody can scale in like that, just because the risk, and because my stop's laying up here, above the high. Okay. All right. Well, I'm not sure that everybody can absorb that kind of a cushion, but I don't know that. Hey, but sorry. She just got home. But anyhow, I'm not sure if everybody can absorb that kind of a drawdown. But what I'm trying to do is the way I personally trade. I would add one, add one, add one. All right, I'm in 3. I would add 2 up here if it got there, and then my stops up here. Now, if you can trade micros, that would make a lot of sense, right? You can just add, and add yourself in. But a lot of times you're gonna go find yourself being to add in up here to 618 and the 786. All your trades are going to come in at this 382 and this 5, or the 50% at best. You're going to get these two. Sometimes you can average in at the 618, but it's just tough. It's tough to get into. So I'll go ahead and give you this trade that. So we broke the lower Bollinger Band and we immediately pulled back into it. So I would have broke it right here. I would have got long off this. I mean short, excuse me, off this 41.54. Okay, and as price come on up, I would have added another one right into this 41.55, which would have been your 41 41.54, 41.54.75. And that's where I would have got in at. All right. And I would be looking for a break of the Bollinger Band, obviously, as terms of exit goes. So the very next candle, it broke it. So it would have absolutely took me out of this first trade at the 0.382. And then as soon as my first trade is taken out, I'm moving my stop to either break even or I'm moving it just above this 382. In other words, so then minimally, I'm going to make this difference, right? At least on one contract, I'm going to make this difference, right? And on the other contract, I'm looking for a target down here is what I'm actually looking for. But to keep myself safe and rather than keep my stop way up here, I'm just going to move my stop down here above this 382, and I got whacked, right? I mean, I made just a little bit. Basically, it was a break-even trade. But I did make a little bit right here, okay? And that's what these pink lines are going to represent. And we're just going to go out in time and just follow to the next trade. I know that was a little bit of a tough example to start off with, but we ain't out here cherry picking. We're just giving what the market's giving us here. Alrighty. So we broke below. There's nothing to do here. We broke above and we did puncture it. All right. And so on this deal, obviously we look to the left. We pull our fibs up, mark out our retracement from the puncture, right, to the low to the left, and we just watch the pull back into it. Right. I'm adding at the 0.382. I'm adding at the 0.5, and that's all I could get added. It didn't actually let me add on down in here. It just pulled back into this cloud. So I'm 2 contracts long, right? On this 382, I'm always looking to get out of it as soon as the Bollinger Band breaks on the upside. And as you can see, it broke the top of the Bollinger Band right here, right? So I was long at 41.72, and I got out at 41.76. Okay. Now I'm long this one at 0.5, right? And I've got targets up above at 0.15, so I'm still long this guy. But my stop for this 0.5, it goes to this, just right above to this 0.38, so that if price comes down here, the worst it's going to do is just take me out at this 0.382 for basically a break even. But he didn't. He just kept climbing. And it come up here and hit target, which is at 41.77. So collectively, 2 contracts is all I can get deep on that one. We just move on to the next trade. And again, all this is a 1 minute chart. So we broke above. We didn't get anything right here on the above. We broke below. We didn't get anything on this broke below. Now we did right here. So we got one, and this is what I meant by that. You got, right? We punctured right before it. So you got 1 bar before, 1 bar there, and 1 bar after. Any of those 3 options, I would take a trade on those. I would not take a trade 3 and 4 bar, or 4 and 5 bars out. Okay, so we got us a potential long trade here. There we punctured it. So we look back, find our low to the left, which we did. And we pulled. This was a loss. This was the first L. This is a loss. Okay, so this was a full loss. So we punctured. We pulled back into it. I would have added right here at 41.75. Added at 41.75.25. Would have added right here at 40. I can't see what that one is. 41.74. And I would have took my loss right down here at the bottom at 41.73. So, that's a 2.5 point loss on a losing trade. That's an L. And here's another trade. So we come down, we didn't puncture nothing. We come up and we punctured here. Okay. This is a doozy right here. So there's another loss right here. I didn't take this trade, but you certainly would have took a loss. There's no doubt about it. That next candle was brutal. There's nothing you can do about it. You know what I mean? I just would have took a loss as I averaged in, and I would have got stopped out right here. So that would have been another 4 point loss for me on that particular trade. Immediately look back to the right, keep following time. All right, we just punctured the lower Bollinger Band, looking for a short. Look to the left, pull the fib in, look for a retracement, and I'm looking to add in off the 382. Add in off all I could get added in was off the 382, 1 short. So I'm looking for the break of the Bollinger Band, and I got it right over here. So I got short 41.64, got out at 41.60. All right, we just keep looking to the right, and yep, we crossed 0, and we punctured it right there. So 1 bar to the left. Look left, obviously. There's our low. There's our high. Run our just retracements in. I'm adding in off the 3.2. I'm looking to add in off the. I'm looking to add in on all these is what I'm looking in. So I was able to add it 382. I was able to add it 5. Okay, which the 382, my target is as soon as we break the Bollinger Band again, right there. And I'm looking to ride this 0.5 out until we hit it in terms of the target goes up above. And it hit it right here, nearly to the tick. But there again, as soon as this 382 is hit, if any of these levels you averaged in, take the stop and move it. All your stops and move them to at least your break even, which would be above this 382. You know, no need in sitting there and letting a winning trade turn you into a loser. Let this little 382 trade, absorb any losses that you have. That's the idea. That's the goal. And then we're at the end of the day. I don't think there was no more trades to be taken on Thursday. Yeah. All right. So we move into Friday here. And the ES, I'll be honest with you, it underperformed. And I had a lot of trouble Friday. To be completely honest with you, I couldn't get any traction. It was just frustrating to me that I couldn't get any traction. But come to find out, after observing and after looking at all this stuff, I was running into the problem. I just chose the wrong product to trade. There was movement out there. The NQ was hands down the one to trade, but you know you can't always be right, I guess. But that was my problem Friday. I just chose the wrong thing to trade. Um, we'll start off here at the open. Obviously, stay away. There ain't nothing to do there. We crossed over. There's just no pullback right here. You know what I mean? Ain't nothing. There ain't nothing there. It just took off. So we just let it settle itself out a little bit. Then we find ourselves in a spot. Wasn't nothing to do there. Nothing. Oh, what do we got here? Actually, I don't know why I got this marked up, to be honest with you, because it didn't cross 0 and come back around. Disregard that. Yeah, so if it gets anything like this, don't trade that. I don't know why I marked that up, to be honest with you. That ain't no good. So we come back across 0, nothing. One bar in front, one bar behind, and there's nothing right here in this little cluster. We break above. I didn't trade that, but you could have traded that. You sure could have traded that. All right, let's mark this one up together here. This would be the easiest thing to do. Looks like it would have been a loss. That's what it looks like. Let me see. All right, this might be a prime example right here to go over what not to do. Because you get yourself in trouble right here. See how this thing, we cross over the 0 and we look up above. Well, we punctured it just one bar to the left, but we just 2 bars to the right, we made a higher high in terms of a candle, in terms of a price goes. Anytime that your puncture is not the highest high, leave that trade alone. There's nothing to do there because you got to put yourself in a bad spot. Even per se on the low side, if your low candle is not the one that punctured the lower Bollinger Band, leave it alone. Don't even trade it because that is not an ideal setup. We want to trade the ideal setup over and over and over and leave the risky ones alone. This is risky. I don't like that, and I personally wouldn't trade that. If I seen that right there happen, I would have it marked up already, right? I would have it already marked up to do a short. I mean to do a long, I would have it already marked up from right here to right here, and I'd be looking for the pullback, and all of a sudden we made a new higher high. That would just violate my rules totally. So if this high ever got broke by another candle before it made the pullback, leave it alone. Don't even mess with it. Disregard that whole thing. Bye. We'll look back over here to the right. Does anybody got any questions about that before I leave that alone and keep going forward? Because that right there gets you in trouble. I mean, hey, you would have got stopped out right here for sure. If y'all good, man, I'm gonna keep it trucking here. Keep it trucking. Let's see. Let's just look a little further to the right. Nothing to do right here at all. We didn't break the zero line. We broke the zero line right here. And
Hey, sorry, Magnum.
yeah,
That trade with the higher high don't enter. That looks like the perfect trade to me. I don't understand
this trade.
why. Yeah, why would you get stopped out there?
No. I'm sorry. You wouldn't have got broke even. I mean, you wouldn't have. You would have made your 38%, and that's all you would have done. Sorry, my bad. Let's mark it up so you know exactly what I'm talking about here. So this is the way I would be looking at it, right? I'd be looking at it just like this. See, we made that high. I'm looking for a retracement over here. Okay. I mean, you would have probably made a little bit, but in my book, it'd been a break even. And we'll cast out the targets. All right, so I would have, per se, I'm gonna disregard this higher high right here. You could have added in at the 30, the 382. You could have added in at the 0.5. All right, so say you got long off this one, and you're long here. All right, we've got targets set up here for this thing to come up here to the 42.32. Well, we didn't make it, so you would have been long from 42.27, and you would have got out at 40. So you would have made 4 points on this trade. Okay, 4 points, and then you have almost a point right here. So you might have made 5 points on this trade. But it probably wasn't a complete scratch. But personally, when I seen this right here, this higher high made, I can't, man. I can't get behind that because, in my opinion, and the way that I look at fibs is if my fib is not at the highest high, I can't get behind that. You know what I mean? And to me, this higher high needs to be the candle that really punctured the Bollinger Band. But in my mind, right? I mean, that's what I'm seeing. But yeah, you're right, man. I mean, you would have made 5 points off that trade. So I guess that, per se, you got long right here. You took profit right there. Well, you're still long this one from 42.27, and you're looking to get out up here at 42.32. Well, it never got there. So, but you've moved your stop up to at least right here. You know, and if you're super smart or sharp, I guess you could have got, maybe moved it on up when you had this huge engulfing candle here. You might have got a little bit more. So you might have had 5 or 6 points. So no, yeah, you're right, man. That would have been right. But I mean, for me personally, there again, if I ever saw that right there, that higher higher being put in before we had a pullback, I'm gonna cut it loose. I'm just gonna look for something else. Personally,
Okay.
All right, so let's see right here. We broke zero. The candle right here. Okay, so we broke zero right here. We're gonna look to our left, pulling up our retracement, and we're setting out our targets. So I'm looking to add in here at the 382, and I'm looking to add in at the 0.5, which kind of lined up with the cloud. So I was able to add one there. and I add another one up here. Now I'm looking to cut one of this 382 contract. I'm cutting it loose as soon as we break the lower Bollinger Band, which it did. So that was from 42.26 down to that's 2 points. And then I'm still long this guy. But as soon as it hits the target, right, the Bollinger Band, this short from 42.27 goes to break even. And my thoughts of break even is down here at 42.26. Um, cover your commissions, you know, what have you. Well, then you're looking for your target to be hit. All right, and your target's casted out at 42.22. And he got hit right here. So bam, bam. Two good short trades there. Keep it rolling. We break. We break to the upside. It's nothing. The bar in front, bar behind, nothing. Yeah, it broke through right there, but you're too far ahead of your skis. You know what I mean? That's me. Um, we broke zero here. Bar in front, bar behind, nothing to do there. So two scratches. Broke zero. Bar behind, bar in front, nothing to do there. Broke zero. Bar. There we go. We broke zero right here. Nailed it. Right there. All right, so we look to our left, pull our highs, pull our low, and we're looking to add in, right? Is able to add one there, able to add one there. We cut this first one loose pretty quick. As soon as it punctured the lower Bollinger Band, stop goes to break even, and we're looking for a target to be hit on this second one, and it was hit right down here, 42.19. So 42.22, 42.19. And immediately, that's a pretty quick trade, actually. I think it's got leftover. I don't know why this is on there. Oh, okay. Oh, okay. Yeah, so I didn't get to get in this trade. All right, so look, yeah, check this out. All right. So cross zero, one bar to the left, it busted the upper Bollinger Band. So we're looking left, pull our retracement, and we're looking for the retracement, pull our targets out. Never got the retracement down in here to add. It never got down here to the 382. Never did. I mean, you could have got long off the cloud, right? And I mean, you would have made from 42.22 maybe to 42.26 up here if you just got long off the cloud. But there again, I'm looking to add off something, right? In my mind, that's what I'm trying to do is add off something that gives me a defined risk and reward. So that's why I'm kind of using these, but yet utilizing the cloud to let it line up within the cloud. But he just got too far up in front. But you certainly could have took that trade. I mean, that's just a sign of strength is what that is, really. So that's why there was no trade taken. We at the end of the day here, it looks like there's nothing else. Yeah, so that's it. That's Thursday. That was Thursday and Friday on the ES. So we got two losing trades, one not taken. So you got 1, 2, 3, 4, 5, 6. Everything was a winner from Friday. 6 winning trades Friday. Thursday, on the other hand, it looked like it was 2 losers. 1, 2, 3. There's your loser. So you 3 winners. 3. So 3 and 3 is what you're on that one. 3. So 4, 5. 6 and 1 break even. All right, so three losers, 6 winners, and 1 break even on Thursday. That's what it looks like on the ES. Now, if you guys are ready, we'll swap over to the NQ. Friday. So here we are, 10:20, 9:30. There's the open. Nothing to do right around the open. We cross. Nothing to do there. We cross. We cross here. I don't know why I didn't get in that trade. Oh, it just kept running. That's why. Lower lows, right? That's back to what I was talking about in terms of the higher highs. Why I wouldn't get involved. I wouldn't get involved right here with a lower low either. I mean, there's just I don't know where to put my retracement. You know what I mean? So I would leave that one alone. But you could have. I mean, I guess you could have took a trade right here into the cloud, and then exited out over here. So I mean, there was potential to take that trade there. Just didn't work out with fibs. Okay, we'll look back over to the right. Nothing right here. Broke above. Nothing. Broke below. All right, we broke below right as soon as it did cross 0. All right, so we run it up, run it back down, cast our targets out, get short off the 382, get short off the 0.5, get short off the 0.618. So 3 contracts short right here. Able to get out of 1 right here at this is a pretty trade too, actually. This thing is beautiful. Got out 1 right here, so your first contract, you were short from 41.61. You're out at 445. Okay. You were short from 466, and you're looking to get out at 423. You were short at 471, and you're looking to get out at 418. That's a good trade. That's a big trade. Beautiful. Anybody got any questions about that deal? Because I mean, that's 3 contracts deep. So I mean, you can think of 3 contracts, 3 micros, whichever. But do you understand how the scaling's working on this?
Yeah. Question for you, Magnum.
Yes.
That drawdown. So you're looking at 15. I mean, you're talking what, 5 to 8 points of drawdown?
Correct. Yeah.
All right. So 5 to 8 points.
I mean, if you can't absorb that much drawdown, an idea, right, is I don't know how many contracts you guys trade if you're just trading 1, 1, 1, 1, 1 all the way up through here, or if you're trading 1, 1, 3. You know what I mean? To get your average back here. But I mean, your stops here. So, maybe only take trades that it's got to work out for your account size, because everybody's account's going to be different. To where it's so hard to put that risk management in terms of the scaling goes. You know what I mean? But if you could get short 1 here and short 1 here, whether it be minis or micros, can you absorb your stop being up here at 41.87? You know what I mean? I don't know. And it's hard to say, you know what I mean, for everybody.
Oh yeah. No. I'm on the 50K top step, and I can't absorb that much drawdown. What I do, when I've traded this strategy the past couple of days, is I've just done my regular drawdown on it. Now I got stopped out 3 times on Friday, but I mean, that's just the way with it. And I understand that going into it. I mean,
Yeah.
it's, you got to have that capital. And this works for, I've had four winning trades, but, Friday was 3 losing and I cut it after 3 losing. I'm not, that's
Yeah,
it for the day for me.
hey, absolutely, man. Get you a plan together. If you got 3 consecutive losers over and over and over, hey, man, just you know what I mean. Get you something cold to drink and just cool off and call it a day. You know what I mean?
Oh yeah, absolutely. Yeah. It's it's the account size. So I think that would be a
Yeah.
definitely, a factor to point out. If anybody's wanting to do this on a small account size, be
Yeah.
very, you definitely got to be disciplined in it. Now, if you're a
Super.
large account, yeah, you'll be able to absorb that drawdown. So that's a positive to it. So if anybody's doing top step, I mean, that 150, dude, you could absorb this in a heartbeat, and it
Oh
pays
yeah,
off for you.
absolutely. Yeah. I mean, I would feel comfortable on a 50K. What's the drawdown on a 50K?
1,000.
That's
1,000. Okay, so if you were trading micros, say you were trading macros, you could get 1 macro, 2 macros, 3 macros.
Oh, I don't know what the drawdown is on the micros. The regular is just 1,000 for the day.
No, I'm saying if you were on a 50K and you were trading each of these levels with 1 macro instead of one mini.
Yeah.
You see what I'm saying?
Oh, okay. Yeah, I got you.
Can you trade macros on the 50K?
Yeah, I can trade micros or minis.
You can only
Okay,
trade
yeah.
the same amount of minis though as micros on the 50K.
I got you. So if you're trading, okay, so if you're trading a 50K account and you can trade 5 micros, okay, you could get short 1 there, get short 1 here, so you're 2 deep, get short 3 there, so you're 5 contracts deep. Can you absorb that
There's no way
up
you
to
should
no?
play with 5. You should do 2 at most because step 2 is not going to let you do 5 on the 50K.
Oh yeah,
So
yeah,
you
that's
got to
right.
play with 2.
Yeah,
Your best bet
yeah,
is to modify the plan instead of starting your ad at 382 to start it at 0.5 and don't go
yeah.
past
You're right.
contracts.
That's right. Yeah,
Try and
that's so tough, man. With that small of a drawdown on that deal, you know what I mean? And I mean when you're trying to scale in like this, because you wanna get deep back here, and I mean that way you can really cost average yourself in here to where, you know, when you do pull that stop down from a 618 and you pulled it down to here, well, I mean you covered a potential loss, that you might have ahead of time. At least this guy right here's covered some of your cost. And if you got stopped out right here, this is going to cover some of your cost. Just being that you were so heavy on this, 681, pullback. Yeah, you just go out to play with it, man. On this whole account size versus scaling size thing. It's
Well,
hard to
if you look at
say.
it as one contract, starting at 5, 0.5 or 0.61,
Yeah,
then what you can actually do is give yourself about 10 points from that position as your stop
yeah,
loss and then just play the bigger trend.
that's it.
Scaling in 2 contracts really, with $1,000 drawdown, really limits how much you can do.
Yeah, I agree. No,
Yeah,
I like that. I appreciate that point right there. That don't go in right at 0.3. Go in either at 0.5 or 0.6. That way, if it does reverse on you, I mean, you can absorb that drawdown. That's a huge difference. Between if I enter at 0.3 versus 0.6. I mean,
yeah,
that's what, 4 points, 3 points.
that's 6. That's 5 points.
Yeah, I mean that's that's $100 less
Yeah,
risk that you gotta incur. I mean that's a percent of your
Yeah.
drawdowns.
The ones where you get stopped out, though, if you give yourself 10 points, you can only really do like, 2 or 3 trades a day on that.
Yeah, no, I mean, yeah, I still like that. I'll have to use that on Monday. But yeah, I like that idea. I didn't think about that.
oh man, we'll keep it rolling forward here. Find us another one. Yeah, here was an opportunity to get long, in terms of breaking above 0, and it busted above the upper Bollinger Band, but there's just no pullback. I mean, it's just off to the races. You know what I mean? Nothing to do there, per strategy. let this thing level out. So we'll go back over here. It fell down below 0, and it poked through the lower Bollinger Band. So we look up to our left and find a high, make that our low. We're looking to add off the 382. Well, given our last conversation, but anyhow, add off the 382. I guess I'll keep talking about this in a personal stance, right? Because I mean, so I'd add in here, and I'm adding in off the 0.5. So I'm 2 contracts deep. Immediately the next candle, I'm out of the 382, and I'm pulling my stop down to break even. We never hit target, so I got stopped out for basically break even on this 0.5 pullback. So that was very little, you know what I mean, in terms of trade goes. One target hit, the other break even. All right, let's see. We popping back up above 0, and here we are, 1 bar in front. All right, found our high, found our low. We're looking for the pullback. Added off the 382, added off the 0.5. I guess y'all can see the pattern here of like how often it's these 2 levels and not quite the 618. You know what I mean? Most of the time it's these 2 levels. Anyhow, added one at 382, added one at 0.5. I'm looking to get rid of one as soon as we bust back through the Bollinger Band, which we did up here. So was long one from 546, cut it loose at 568. Was long the other at 543 and cut it up here at target at 572. That's a pretty good little trade. Everything's been winners except this little break even deal here. Pretty much break even. But had you not pulled your stop down here, that would have been a loss. You would have got a nail, because it never come down here. Something to be mindful of there. We broke below 0, nothing to do. See, if you guys ever see this scenario right here, where this thing is just meandering about, really close, not making a clean break above, clean break below, stay out of that. I tried to bend this and beat it and paint it to match to get this thing to work, and I found myself getting stopped out, and that was one of the things I was running into Friday. Was just getting frustrated because I was trying to mess with this. Just leave it be. You'll do yourself a big favor by doing such.
Can I ask a question about that exact situation? Because this is a trade I took on Friday.
Yeah.
It was when it first broke, right where that
Right here?
dotted line is, right there. It broke above. I didn't yet know that it was just gonna go right back down, and it just
you
broke
got it right
above
here.
there.
You got over here. Okay.
Yeah.
All right.
How would you know not to take that trade? Because before you get the information to the right, it looks like it's fulfilling
All
the
right.
rules.
So if you look right here, you broke it right here. 1 bar to the right. See, you didn't break it down here on this slow line did not break 0 until over here. You follow me? And when you're breaking 0, you only want to break that Bollinger Band 1 bar to the left or 1 bar to the right. So one of these 3 should have broke that Bollinger Band in order for this thing to be a long, because it was way over here on the far left side. You see what I'm saying?
All right.
So it kind of front run the indicator basically. And even right here, you would have, it broke 0 here. Well, 1 bar to the right and 1 bar to the left, it didn't do anything. But 2 bars or 3 bars to the right, it actually punctured the lower Bollinger Band. But by that point, you've done, got outside of the.
By that time, it's clear that it's in a real tight range. But this is the first time that screwed me over. But yeah, 3 bar rule. All right, I can go with that.
Yep, 1 bar ahead, 1 bar behind. Yep, absolutely. Hey, and don't feel bad, man, because I did the same thing. I was getting so pissed. I mean, it was just, I was really getting pissed, and I'm glad Slade stepped in, man.
I made $50. It's all good. across the day.
Yeah, Slade stepped in and he really did. He saved me. He's like, hey man, I think you're a little bit tilted, and which I was getting pissed, but I just couldn't get no traction. But anyhow, nonetheless, we identified the problem and let's just stay away from all that madness and we'll be in good shape.
The other thing that you can look at for those type of areas is like the delta stuff, like cumulative delta and various other types of market internals can help really filter out that sideways action and when it's actually ready to pop down. If you actually looked at a delta on that, you would see that we started a downtrend after that. Like basically on the first initial push down there, we started the delta, which lines up with the strategy better.
Yeah.
So
basically, when the cloud turned red is when the downtrend actually started. Pretty much, is what you're saying. Yeah, I mean it's.
Yeah, that's when the sellers showed up in mass there out of that range. So draw your ranges. Whatever you got to deal with at market internals, that would help you stay out of, that mid range there.
Yeah, it's some type of add-on for sure. Absolutely. Oh Lord! All right, let's keep it scrolling over here. We broke. This looks like a big L. I think. Let's go through this. I don't know what I've done here. All right, so we broke above. We're looking for a long, and it punctured it right there. So we're looking for the high, which is one bar to the right. We mark it up. Why? What do I have going on over here? I don't even know why I have this. Let me fix this. This would have been a loss. This is what I'm looking at. So we'd look over here to the left. Pull the target out. Pull the retracement out. One bar to the right. Okay. Yeah, this would have been a big fat L. Yeah, this would have been a big fat L. And back to what you were just saying, man. You know what I mean? I guess if you put it on the add-on, you would know, hey, probably not a good idea to get long right here. You know what I mean? If sellers started showing up, you would have saved yourself, the dump. Great point.
First time I've seen some divergence between the strategy we were talking about last week that I was using.
Yeah.
And this one, that's the first time that we saw some divergence. But yeah, it's clear as day, even during that push up, that the buyers weren't really there on something like the Delta. So that might have saved you on this one, but from a mechanical standpoint, this would have been a loss.
Oh yeah, absolutely. That'd have been a big fat L. I would have lost money right there. Ain't no doubt about that. Had I actually been trading it. On the downside, we broke it. So let's just mark this thing up here. So we broke up. So you immediately would have had a short to take right after you got your fat L on the long there. All right, so we're looking to, there's our short. We pull back into it, so we're looking to get short here. Let's go ahead and mark this thing out. Would have got short here, and I would have been looking to exit here. It broke there. That would have been this short. Okay. You couldn't quite got short off the 0.5. You didn't get there. You definitely would have got short here. And you would have just exited obviously when it hit the Bollinger Band. So that was a W for that little trade there.
Question on that one though. That candle never pulled back into the cloud.
Never did, but it did actually pull back into this 382 level.
Okay, so as long as the retracement's there, the cloud is not going to matter.
That is correct. Yeah, it just pulled right back into that. I mean, if you can see, if I put my crosshair over to you, you're able to see that wick. I mean, that wick, it come up pretty high. You know what I mean? Above this eye. You know? So realistically, this was your low, and this is your pullback. You know what I mean? The pullback actually started right here. You know what I mean? There was your doji, and then you've got your retracement coming in this way right here. And at some point, this candle started out green, and then the sellers showed up right here and pushed it back red. You know?
Yeah.
Yeah, that's it. Oh, let's see here. We cross over right here. One bar in front. Yeah, you would have took a fat L right here. For sure. This would have been a loser. Can mark it up. I mean, that's textbook, right? The mechanic says that you take a long right here, up, and then this probably lines up with that ES trade, right? That had that massive, just down candle right there. It might have been news that come out right here. That I don't know. That almost looks like something news related. You know what I mean? That's not normal. So that might have could have been avoided. If you knew, if news was coming out. But it almost looks like news came out for this. I mean, that's a massive candle, right? From 480 to 526 in 1 minute. That probably was news. Put it this way: if this was news related, you wouldn't have been in this trade because you wouldn't be in a trade when news is coming out. You know. So, but if it wasn't news related, you took an L. We broke zero. One bar in front.
When Treasury Secretary said something about back taxes collection or something?
It may have been.
So
I mean,
not a planned news release, but news related.
Oh, it was not a news release. Okay, so they weren't doing a press conference or anything?
I can't remember. What's the name? Yellen?
Yellen. Yeah, so that was the day when the Fed heads were talking. Yeah. I mean, I personally don't like to trade in terms when news is being spouted or they're doing, somebody that's got market influence is talking. I don't like to trade that because you don't never know what's coming out of their mouth. You know what I mean? I'll trade in front of or behind. But it's just something to be mindful of. But that candle right there is remnants of news. That doesn't look normal. There ain't nothing about that normal. All right, so we crossed zero. One candle in front, one candle behind. There was nothing to do there. You almost got yourself in trouble right here if this candle would have been actually over here. But the one in front and one in behind rule, 3 candle rule, is important. You saved yourself some pain right here. Let's go back over here. We broke zero. What am I get this marked up as? I think I got this one. I think I got this one wrong. Yeah, I got it marked up wrong. Let's remark this guy up. All right, so one candle in front. Nothing to do here. See that? Yeah, there's nothing to do there. I don't even know why I had that marked up. So here's when you cross zero, right? One candle in front, one candle behind. Neither one of them punctured it. Nothing to do. Crossed zero on the bottom side. Nothing to do. Crossed on the upper side. it punctured right here, which made the high. So we look left, pull it back, and set our targets above. Alrighty, on the pullback, it pulled back into the 382. Got long 1 there, got long 2 there. Exited the 382 at the first puncture of the Bollinger Band, and holding on to 0.5 till we hit target up here at 0.5, which was you're long from 500, and you got out at 549. It's almost a 50-point deal there. And it just stayed above for quite a while. And we're here at market close anyhow. You wouldn't be wanting to play ball there. All right, so that was Thursday's deal. I mean, hindsight 2020, I wish I would have traded the NQ Friday rather than the EF. And I'm still working on that in terms of knowing which one to trade, but used to when I have my levels, I normally I would trade whichever one had the most space in between the levels. That way, I gave myself a little better opportunity. Typically, you're always going to make more money with an NQ, but not always is it going to be outside of a chop zone too. So that's kind of the way I focus things on. So, and I'm still going to try to approach it with that way. Would be set my levels and figure out which one has the best opportunity to move inside those levels. Is probably which one I'm going to trade. I ain't got nothing to do with y'all because y'all could probably trade both, but I got to pick one or the other during the day. You know what I mean? All right, so right here ahead of market open, there was an opportunity, and sometimes I'll take these trades ahead of market open and after news comes out. Obviously, this is all news, so I feel confident taking trades there after, at least it's released. Here's a great example. So it came above. Hey, ain't nobody doing nothing there. It come down below the zero line and busted the Bollinger Band. We pull up to the last high, mark everything out. Was able to get short off this pullback in at 3.2. Able to get short one more at 0.5. Got rid of one when it punctured the Bollinger Band right here. Got rid of the other one down here at target. That's a pretty good little trade. Pretty quick trade too, actually. That's pretty fast. Went right to it. Now here's a pretty sporty trade. Dang, that's some money to be made right here. Holy smokes. Oh, pretty good stuff. Okay. Let me get my bearings straight here. All right, we busted to zero. There's nothing to do. We broke above. All right, so yeah, we punctured the upper Bollinger Band. All right, we're going to pull back to the low, find our low to the left, run everything up, the drill. Add one at 3.2, add one at 0.5, and add one at 0.618. So 3 contracts deep. Looking to cut one loose as soon as it breaks the upper Bollinger Band, and it did right here. Okay, you're long one more from 708, and you're looking to cut her loose. Has 100 points, nearly. Get up. Nah. Man, I'm kicking myself in the tail for that. That hit target up here. Boy, that's a missed opportunity, isn't it? Holy Toledos. And there's long another one down here at 697. But it never got up to target 3, which was 815. On a situation like this, when you're this strung out ahead of the lower cluster, just put the stop down here at the next available lower high. You know what I mean? Because if this level's broken, maybe structure's starting to fall apart a little bit. You know what I mean? And so instead of having that stop down here still, just move it up. You know what I mean? And hopefully it'll go up here and hit your price. And if not, at least the littlest amount that you're willing to take is down here at this lower side of this structure. And you just let it play out, and you would have got stopped out way ahead of being down here. You know what I mean? On this last contract, which you still would have made bank. I mean, bank. 698 to 766. I mean, that's a monster trade right here. This is a big one. I gotta quit looking at that, and that right there is disappointing for me. I didn't get it. All right, so we broke loose. One to the left, one to the right, nothing to do. Broke above. It almost looks like it did puncture it, didn't it? Boy, it was close. It didn't puncture it, but it was daggum close. One to the left, one to the right, nothing. Nothing to do there. That was close, though. That right there might have got you in trouble, because if you was watching that thing right there and you didn't let that candle close and you was trying to front run it a little bit, which I guess if you let it close, it wouldn't really matter, because you wouldn't be anything but pulling you high and low. You should have been good, unless you was playing off of this, you know. That's one of them tricky scenarios, if you ask me. It's one of these deals where you better be sharp, you know. Really pay attention and be disciplined. If it's not exact and it's not perfect, don't mess with it, right? You want to see it bust through it. You know what I mean? No doubt about busting through it like this. You know, this little iffy stuff is just that iffy. You know. Our zero line, yeah, we busted through right here. This thing a little bigger. Everybody can see it. Crossover zero line, busted through it. We run it up to our high to the left. Target's out. We're looking to trade the pullback. We got short one at the 3-2, and 1 minute later you're out. So 786 down to 776. So 10-point trade, just real quick. Nothing, you know, nothing super sporty there. And right here, you know, it's just rolling, right? You know, right back to what we was talking about with that chop zone thing. You know, we know the effects of it. You know, getting smacked upside the head 4 or 5 times. You better off to leave that be. There was a trade, but it wasn't that good. You know, I mean, we can go over it. Ideally, you wouldn't want to trade this. You would want to leave this trade alone, because it didn't really break over it healthy enough. You know, man, I'm gonna delete that. That didn't even be showcased. That right there is just gonna get somebody in trouble, and they don't need to do it. I don't like it. Yeah, don't mess with that madness. Stay out of it. Let's go to something else that makes sense. All right, we bust above. And we cracked the upper Bollinger Band right there. Why am I not going long right here? Oh, that's why. Missed it by 3, didn't we? Here's the zero line, one above and one below. Okay, yeah, so here's a good point, right? You would have saved yourself some trouble right here. We busted above 0 here, right, on this candle. The candle in front, the candle in behind, none of which punctured the Bollinger Band. But yet 2 candles in front of it did, which would have indicated possibly take a long. Well, you know, had you done that, you would have run it up from here to there and been buying this pullback only to get whacked. You know what I mean? Great example. Kept yourself out of trouble right there. You know what I mean? Because that 3 candle rule, right? One behind, one in front, and the one that it is. So we're looking for the next setup. Right here, we busted below on the 0. All right, so, and the one in front and one in behind, one in front set the low. So there's our low. We pull back for a target to our left, run everything up, yada, yada, yada. So we're looking to get short back in here. You got short off one at 724, one at 728, and one at 732. Okay, you're looking to get rid of this 382 one as soon as Bollinger Band breaks, and it broke right here. At 704. So that's 20 points. Although you're long here from 728, and you're getting rid of this one down here at target. That's pretty good trade. And you was short one more from up here at 732, and it hit target too. Man, that's a good trade. Boy, that's a clean trade. That's beautiful. Daggone. All right, y'all guys are seeing that piece. Holy smokes, that is another good trade. All right, we got a signal, nothing. Ain't nothing to do there either. Follow it, nothing to do here. Broke a zero line, one above, one front. Okay, the one behind made the low, so we're running it up. We're buying, or we're selling a pullback. And you sold one here at 382, and you could not get another one off. No, so that would have been a really fast, quick trade. I mean, not much money from 692 down to 685. That's basically a scalp. You know what I mean? Pretty much a daggone break even, really. Not a lot of money to be made there. A little bit. Don't get me wrong. Ain't that bad. I'd take it. Why has this not been marked up? We broke above. I bet this is a pullback scenario. You wasn't able to get a pullback in. All right, so we broke above, obviously. One to the left and one to the right. This is going to be our high. So let's mark this thing up. There's your high. There's our targets. Okay, so we're looking to add in right here. Yeah, there wasn't nothing to add into. You couldn't add it off the 382. You could have added in off the cloud and traded it back up here to where it busted the Bollinger Band again. Right, so we run into this earlier. I can't remember if it was the ES or earlier in the NQ, but you know, it didn't pull back into this level, but it did pull back into the cloud, and you could have took that trade. Yeah. So that's why it wasn't marked up. Wasn't nothing to do. I mean, it was. It's just this was a strong move up, obviously. Now we getting a little long in the tooth right here. This is one of these late day deals where it's kind of iffy. You know, I don't know. Sketchy. But anyhow, nonetheless, I'm going to show you the trade. Across the zero line, we made the low. Look back to our left, pull them up, mark them up. Getting short off the 731. And we're getting short off of the 785. And we're getting short off the 738. So selling the 382 as soon as it hits the Bollinger Band, and we're selling the other two in target. Boom, boom. Perfect. I do not condone this though. I don't. It's kind of a bad spot to take this trade. So you know, the end of the day can get tricky. I mean, you're 1 minute before the close. Don't take this trade into the future. You go get yourself in trouble. You have more bad luck in this time frame than you're going to have good luck, you know, or at least trades working out, because things get crazy, right, into the close and, you know, right after the open. So, yeah, that was a good trade, and yeah, it paid, but it just almost ain't worth it. You know what I mean? So kind of the way I'd look at that deal, for sure. I gotta step in here real quick, and I got to grab my charger. I will be right back. Give me 1 second, okay? Guys, y'all hear me?
Yeah.
Okay. Hey, has anybody got any questions on this deal?
Yep.
No. The thing I want to point out. So yeah, I started the strategy, and I definitely did not follow the rules because the 3 bars. So yeah, I was taking trades after the 3 bars, and that's why they're losing trades.
Gotcha. I mean, hey man, this thing's a work in progress. You know what I mean? It was put out there to where it has potential, but I mean, it's fine tuning, right? And I think we were all collectively trying to figure out how to get this thing, you know, streamlined. I mean, fundamentally it works. But now we're like just performance tuning. You know what I mean? This 3 bar deal, one to the left, one to the right. You know what I mean? It really kind of covers your tail a little bit better. But
Oh yeah, definitely, and yeah, I appreciate Banana Shop pointing that out on the fib. I'm gonna basically switch it up, and I'm gonna put in a rule. Only take at 0.5 or 0.6. This way, drawdown is not going to be as much, and
yeah,
if need be, you can catch a bigger shot of the trade.
that's right, man. I mean, if you look through here, I mean, if you would have just caught this rascal right here, right? If you could have took that amount of drawdown, dude, this was a sweet trade. I mean, this was beautiful, absolutely beautiful. Just by not even messing with this guy. I mean, even that was a good trade, but from up here to up here, and he's both hit target. I mean, to the T. That's beautiful, beautiful stuff. Absolutely beautiful stuff. It's almost like a measured move,
Have you changed any parameters on any of the indicators at all since your last stream?
No, like I said, the only thing this thing is right here, this is a thundercloud, and I can't find the wonder cloud on my trading view. So, and if this cloud is just the cloud, there's very little difference between it and the wonder cloud. The biggest thing
use
is
the same 2 EMAs. I think it was the 8 and 21.
I think it uses. I don't know what the script is. Let's look.
The cloud's just an 8 EMA and a 21 EMA, correct?
Yeah,
that's what it was last stream.
Yeah, that's what it is. But this one right here won't let you change anything. This is all it's got for me. You know what I mean? I like to visually look at the cloud, because there again, guys, I'm on a cell phone 99% of the time, so it's harder for me to see too many lines on the chart. So looking at the cloud visually helps me tremendously. But there's nothing here for me to.
Yeah, I use
You know what I mean?
NinjaTrader. I can't find any cloud indicators at all that use it, so I've just been using the 2 EMAs.
Yeah, I mean, it works, right? If you can withstand it, it works great.
Yeah,
my Bollinger Bands, the settings on them, they're all the same as you guys have on the Trade of 8. Nothing has changed. Absolutely nothing. And a 310 oscillator, it is. I just disabled everything. The histogram and stuff.
Well,
I didn't really care
it's
about
in the
that.
name with that one.
Yeah, right. 310. Yeah.
Literally. Bollinger Band settings are different. Those aren't default settings for Bollinger Bands.
No. None of the strategy called for a default setting. So this is normally 20 for default, and this is normally 2 for default. So your link's 15, and your standard deviation is 2.21.
Yeah, just wanted to call that out so that nobody was confused.
Oh, my bad. I thought you. Gotcha. Yeah, it is definitely different. Yeah, man. Outside of that, that is the only things that I have. Uh, but I have been trading. Hell, I tell you, man, it's so tough. Um, so I can trade on my trading view, but I've got to trade through the URL on my phone because their app don't have these buttons. You know what I mean? Where I can trade. Um, so I've got to come over here and I've got to click, and I've got to go down here and hit trade. But I can put limit orders in, right? Because I've got these levels to put limit orders in on, and then I can come down here and put orders in as well. But the thing I don't like about the trading on TradingView on the mobile part is when you're in a trade, it's got a big block right here. You know what I mean? And on a mobile phone, that takes up a ton of real estate. You know, um, that's one reason I don't like it. But I can't get all my levels when I was setting my levels up. I can't get all my levels on TradeAvate to know if I'm coming into a chop zone or know if I'm coming out of a chop zone. Or maybe where some of my big red levels are, or some of my contested yellow levels are. So I've got to do a better job of trading on the URL side of TradingView on my mobile phone, so I can get better better at looking at these chop zones like this right here. If I had my levels up, I would have known this was a chop zone, well ahead of the chop zone. You know what I mean? So it probably would have saved me. Either way. And so it just keeps you out of trouble. Things at my levels, the way I use them, it keeps me out of trouble. Hey, one thing I want to show you.
Observation.
Go ahead.
It's a small sample size, but were there any successful trades that scaled in more than 3 times? I'm thinking that fourth scaling might be worth removing.
Yeah, that 786. It never got pulled back into it. I mean, it only got pulled back into the 618. It never pulled deep in here on none of anything.
It just means that the bad trades, the loss is higher if you scale in that fourth time.
Yeah.
And there was never a time when scaling in a fourth time was a good thing.
Yeah, there's nothing to.
It's only 2 days, but
yeah. I mean, you almost could have got scaled in right here. Not quite. And that's the thing I would do, right? In my mind, I'm loading the front end lightly. You know what I mean? And when I start getting up here to the 618, I'm starting to load the boat a little heavier and a little heavier. You know what I mean? And then that way I am heavily loaded on the back end. That way I can at least pull my stops to break even, so that even if I don't get filled down here at my targets, just being from this level and this level loaded pretty heavy and just get stopped out down here to trade one, it's still a good trade. You know what I mean? That was my reasoning and thinking. Why to load heavier at the 618 and the 786. But I mean, if you think about
when I try this tomorrow, I'll probably put my stop at the 786.
There you go. I mean, from what we've seen, it's pretty sporty. I mean, the 618 seems to hold the line. Yeah. I mean, what probably, I don't know how many. I mean, the majority of the trades pulled the 3.8 and the 0.5. You know what I mean? The majority of the trades did. There was very few that actually got all three. Yeah, these two levels right here. Well, you almost got filled right here at 786 right here. Yeah. Almost. Sure did. but it didn't get filled out. So, wow. All right. Well, anybody got any more questions? I want to show you guys one thing real quick on the 30-minute chart. That is pretty interesting. And the thing that I haven't found on these bigger time frames is, the problem you run into with these taking shorts on these bigger time frames is, stocks tend to typically only go up, historically anyhow. So finding these longs on these setups are pretty good. The shorts haven't seemed to work out as well. It's more hit or miss. But given everything that we just went over, I marked this up. I thought it was pretty cool. So as you can see, we broke above, and we really didn't get anything to the left or the right over here. We broke below. Well, we failed totally on this as far as breaking to the low, to the left and to the right. We didn't get anything there. But when we broke above on the right here, we broke way above that Bollinger Band. So I marked up that low, marked up the high, and we come back down in here and tested this 618. Well, we tested all three of these, and we're starting to work our way back up. So, obviously, if you got long right here, I mean, granted, you can only get this kind of a trade going on if you're in, a micro. To absorb this much, this is a ton that you would have to absorb. But anyhow, what I'm thinking is, maybe we come up here and we hit this upper Bollinger Band somewhere up in here, and that's where you would have took this 3.2 off at. And if you're long from 703 or long from 676, then you can mark them up, right? And potentially take it, where you were long from here, that's where you're looking to exit. And if you were long from here, this is where you're looking to exit. You know what I mean? Just something to be mindful of. I'm not saying it very well it's going to happen. I mean, we've got a down sloping. I don't know. You know what I mean? And I'm not, maybe it's indicative of this, and it's not taking into account of this. But this thing could very well just go. I don't know. Just something to be mindful of, and just maybe kind of pay attention to on the 30-minute chart the next couple of days. I think it's pretty neat. Pretty neat. Well, guys, y'all got anything to add to this? Anything y'all want to go over before we cut this thing loose?
I'm good. Appreciate your time.
Hey, no
thanks
problem.
for doing this, mate.
Hey, no problem, man. Hope you guys can get something out of it. We'll see you guys Monday.
Have a good one, Magnum.
You too, man. See you guys.